the best of Money Matters. Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a quick look at how Singapore markets close for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares were trading in the red today after overseas markets closed mixed. So as at the midday break, the Straits Times Index was down 0.1% at 3,786 points after some 481.1 million securities changed hands in the broader market. We do see the STI remaining at that level towards the close as well. So the STI closed down 0.08% at 3,788 points. In terms of value turnover, we are looking at 994 million Sing dollars. Gainers outnumbered losers though, 278 versus 226. Top advances for today, we've got here Jardine Cycle and Carriage, UOB and Yangtze Shipbuilding Sing dollars. And top decliners for the day, DBS, Venture Core and Aces. Now in terms of counters to watch, we do have First REIT. After First REIT received a preliminary non-binding letter of intent from Siloam International Hospitals to acquire its portfolio of hospital assets in Indonesia. Now elsewhere, from how Nvidia's chief Jensen Huang is embarking on that trip to China this week, to how Chinese officials are reportedly evaluating an option, a potential option that involves Elon Musk acquiring the U.S. operations of TikTok. We've got more international and corporate headlines in focus. And joining me on the line today is Too Jun Cheong, Assistant Dealing Manager from Moomoo Singapore. Jun Cheong, welcome to the show and Happy New Year.
Happy New Year, Tian Tian. Thanks for having me.
Can't believe it's our first chat of 2025 already.
Yes.
Jun Cheong, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when it comes down to the biggest movers?
So the Straits Times Index is on its fourth day of losses after hitting a new high. So it closed off a little in the red today at 0.08%. So one of the biggest winners today is Yangtze Shipbuilding. It gained around 4.07% as of market close, being one of few counters actually in the STI with the share prices nearer to its all-time high. So the stellar growth of Yangtze over the last few years have made some investors worry from a valuation point of view. However, for me, I think investors should know that even at this current share price, the current PE ratio for Yangtze is at 11.7, whereas the median PE ratio for Singapore is at 12. So the latest 3-year period we have also seen for Yangtze is an excellent 140% overall rise in the EPS, really aided by its short-term performance. So yeah, Yangtze continue to do well. However, another focus I would like to talk about today is really DBS Bank. So for the 4 days of downturn in STI, it's obvious that the bank has also been trading in the red for 4 days. So as of the market close today, the DBS was down about 0.39%. At the midday, it's traded around 1% down today. This is really because a lot of investors are waiting for the market PPI and CPI data later in the week, especially after the hot job employment data last week. This has actually prompted the US 10-year yield to briefly touch the 4.8 mark, which is a level we have not seen since October 2023. So with potentially lesser rate cuts in 2025 by the US Federal Reserve, our trio of local banks will likely benefit from this. However, from the trio of banks, DBS investors would be actually eager to look at the change of the CEO from current Mr. Piyush Gupta to Ms. Tan Shu Shan in the starting of the year later.
You talked about the PPI. I believe the US PPI, we're looking at a gain of 0.4% this time around for the headline figure, right?
Yes, that's correct.
Okay. And aside from that, I suppose lots of bank earnings to watch as well. But
yes.
Before that, Jun Cheong, let's take a look at the counters to watch for today first before we look at the end of the week. We have First REIT, because First REIT received a preliminary non-binding letter of intent from Siloam International Hospitals to acquire its portfolio of hospital assets in Indonesia. How significant is this piece of news for the REIT if we look at its unit price movements? I think up some 3.9% earlier, right?
Yes, that's correct. So for long-term First REIT holders, they will certainly cheer on such news, whether they are looking at it from an angle to exit or actually from a price appreciation angle. So for First REIT itself, they have about 15 properties in Indonesia itself, and this acquisition from Siloam International would likely leave First REIT with just the hotel and country clubs properties left for Indonesia itself. And this is pretty significant that investors must take note. There are many factors, to be honest, to affect any of the S-REIT share prices. I'd like to talk about two, particularly for First REIT. So firstly, of course, it affects all S-REIT, which is interest rate. So with the rising yield, cost of borrowing has become stickier and costlier for businesses. And First REIT is, of course, and all the other S-REITs in the market, they have shared the same pain. So the share prices of many S-REITs has come down from the highs of in October. So with the proposed two cuts for the whole of 2025, the cost of borrowing will stay elevated and it will become increasingly tough for REIT manager. However, for S-REIT, the second point is actually the depreciation of Indonesia rupiah, or inversely, the appreciation of Sing dollar. Because the reporting, they're all done in Singapore dollars, and the weakening of Indonesian rupiah would result inevitably in the lower revenue from the Sing dollar terms itself. So for another important thing is for Siloam International is that they are also the existing operator and tenant for a lot of for all the assets in Indonesia for First REIT. So this sale will more or less allow First REIT to really exit the Indonesian market and focus their entire healthcare REIT sector in the other markets they are in. Because a lot of First REIT investors, they would know that Siloam actually contribute to about 1/3 of First REIT's revenue. And what these investors would want to know is what the REIT manager would do after exiting, because this exit from Indonesia itself would certainly bring down their earnings significantly. So investors will have to follow closely on what the First REIT's REIT manager will be doing.
Okay. And it appears that, Jun Cheong, we can't really run away from talking about Singpost. More news out of the company today. This time around, its former group CEO, Vincent Pang, has resigned from his board roles as a non-executive, non-independent director with effect from the 12th of January, which was Sunday. So not much of a surprise, I suppose, but how far will the developments from here onwards move the needle? Can we move on from Singpost already? More or less a case close?
I would say it's more or less a case close, but certainly a lot of this recent news around Singpost brought a lot of cheers to investors for Singpost. Because trading volumes have really surged ever since the sacking of the top three executives. However, since the sacking of the three executives, the share price of Singpost has actually hovered around the 52 cents to 56 cents range. So, of course, with Mr. Vincent Pang's resignation from the board, it really does bring this whole story to more of a close. Although they are likely to contest against this sacking, I am pretty sure that Singpost will have substantial evidence to back this decision of firing, as firing of three top executives for a main board listed company is pretty much unheard of. So I guess a lot of opportunities that have snapped the Singpost price at a low will likely stay in profit until, let's say, any further escalation happens.
Okay. Now, across the region, Jun Cheong, let's take a look at India. We don't get to look at India every other day, but we've got inflation numbers out of the country. Inflation in India eased while the rupee plunged to a new record low. So giving the central bank reason to remain cautious, even as most analysts are predicting interest rate cuts from February. So question for you, Jun Cheong, what do you think is the outlook for the Indian economy, and how far will developments in India filter through to Asian equity markets?
So for the second straight month, year-on-year, India's inflation actually did decline to now about 5.22%. For the Central Bank of India, the Reserve Bank of India, they do have a 6% tolerance limit for inflation figure, and this was last breached in October. It has come down from that, but it did breach over the 6%. The rupee also did plunge to a record low in recent weeks, and all of this has actually complicated the Reserve Bank of India's decision making. So for let's talk from a stock market perspective. So the weakening of the rupee, it's great because the share price of a lot of companies in India will continue to rise. So the Sensex, the Nifty 50 index, they will likely go higher and higher due to the cheaper rupee. And this is what we have seen in the last decade, as well as what we have seen from Japan itself. However, from an economic perspective, this can really brew bad news for India. Yes, the stock market will likely, the index itself will likely continue to rally, but the cost of goods will continue to become more and more expensive because the rupee has weakened, affecting a lot of livelihoods of citizens. India is a huge consumer of oil, imports nearly 80% of it to power the country of about 1.4 billion. However, despite all of this, I think for India itself, even let's say the short term for the next 5 years, it's likely poised to do well as ASEAN and India really takes the global stage. The beauty of India is really what China has done over the last years. They have the young and dynamic population with a strong tech background, and then they do have a rising and growing middle class as well. This is really what China has done during the 2000s, and it's really being replicated closely by India. So I think overall the outlook will continue to thrive, but the flow from India to Asian equity will likely not be as stellar as what we've seen from China. So the India market is pretty much, within its borders, they are doing well by themselves, and the outlook to other Asian markets will unlikely spill over in the short term.
If you're just tuning in, we're now in conversation with Too Jun Cheong, Assistant Dealing Manager from Moomoo Singapore. Big news of the day, Jun Cheong, is how Chinese officials are reportedly evaluating a potential option for TikTok, and that involves Elon Musk acquiring the U.S. operations of TikTok if TikTok fails to fend off a controversial ban. How would you read into the developments, and what are the odds of it materializing, though? And if it materializes, what does it say about the nature of U.S.-China trade relations in a Trump 2.0 era?
So should TikTok actually be completely banned and they have no other solution? I think the proposed deal for Mr. Elon Musk to take over will make a lot of business sense, even for the Chinese government. So, of course, Mr. Elon Musk, he currently is the owner of previously Twitter and then now X. So he do have some of this knowledge of running another social media company. But what I see is a bright light for the Chinese government will be the bargaining chip for them against Mr. Elon Musk. So Mr. Elon Musk, we don't know him as the owner of Tesla as well.
Yeah.
Tesla sales in China have hit a record high in 2024, and Teslas are commonly seen on the roads in China itself, with the Gigafactory producing the popular Model 3 and Model Y. So with this hand, the Chinese government could really use this as a bargaining chip for Mr. Musk to adhere to the Chinese government rules and regulations on the use of TikTok in the US, in order for him to have continued flexibility with the Tesla factories in China. It is really a win-win situation for both the Chinese officials as well as Mr. Elon Musk, of course, should this deal go through. And personally, I think the odds of this materializing through would certainly be really high if the bans do take effect. Because on the roads now, we are seeing that there's many talks that Xiaohongshu or Red Note will be the next alternative for users after the TikTok ban. But Xiaohongshu works more like Pinterest, whereas TikTok is more of like Instagram Reels. So there's some mismatch of interest from the users and from a user point of view, and as well as an adaptability point of view. So Xiaohongshu would very unlikely be able to completely replicate out of those users from TikTok, which is about 170 million users. Regarding the U.S. trade relations in a Trump 2.0 era, Mr. Elon Musk and incoming President Mr. Donald Trump, they are great friends / great working partners. So should Mr. Musk do take over TikTok itself, it will likely bring a lot of social media traction even for the incoming U.S. President Mr. Donald Trump. Although in some cases there's talks that this would have a knockoff effect for Mr. Trump because he do have this Truth Social, the social media platform.
Okay. Now, Jun Cheong, let's get ready our bags of potato chips because it's all about semiconductor chips from now. So, Nvidia's chief Jensen Huang, he is embarking on a trip to China this week, visiting major cities, and that's seen as a sensitive time for the firm. So, sources familiar with the matter said Jensen Huang is due to arrive in Shenzhen for the annual Chinese New Year celebrations for employees around tomorrow, 15th of January. And he also plans to visit Shanghai and Beijing. Another source said he will also fly to Taipei later in the week. How would you read into the latest trip, given that it happens at a time where White House limits sale of advanced AI chips? China has an antitrust probe into Nvidia as well. And the question is, if this is an annual affair and Jensen Huang doesn't go on this trip, isn't it more awkward for him?
Yes, I think it will be really awkward for Jensen Huang should he not attend this trip itself and avoid it completely. Yeah. Typically, for a lot of foreign companies, they usually send their senior executives to negotiate with Chinese official on antitrust investigation, as you have seen from Qualcomm itself. So on the side of this antitrust, it's very likely that for Nvidia itself, the visit by the chief, which is Mr. Jensen Huang himself, would really certainly raise a lot of eyebrows. I would likely say that Mr. Jensen Huang will not change this planned itinerary, even if it's considered quite a sensitive time, especially as Mr. Donald Trump is getting elected in on the second term. It would likely become a more strategic trip this time around for Mr. Huang and the PR team for Nvidia, because they will certainly be preparing for certain worst-case scenario. And in this kind of cases, it's very likely that Mr. Huang will avoid the direct visits to Chinese officials and instead follow what maybe, let's say, Qualcomm has done and send his senior aides for the negotiation if needed. And for Nvidia itself, Nvidia has become a company that I would already say it's kind of essentially too big to fail, given its sheer size and the application in the AI space that it has. And it's very unlikely for the White House to really impose anything against Nvidia because of this current trip, because it could really severely impact the whole AI space itself.
Okay. And a quick 1-minute question for you, Jun Cheong, before we wrap up, right? Chip designer Arm Holdings is developing a long-term strategy to hike prices by as much as 300% and has discussed designing its own chip in a move to compete with its biggest customers. Any quick thoughts?
I think ARM has played a significant role in the rise of smartphones and energy-efficient data center chips. And they have licenses on IP with Apple, Qualcomm, Microsoft, which all of them use their designs on their chips, and ARM actually earns royalty. So, however, despite ARM's success or how important they are for the fiscal year of 2024, the 3.23 billion revenue that they do have is really small compared with some of the names that we are familiar with. So I think by hiking price, it will be successful, and I think it really would, because this is simply from a supply and demand issue.
Okay, I see. Lots to watch indeed. Thanks so much for the insights, Jun Cheong. That was Too Jun Cheong, Assistant Dealing Manager from Moomoo Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.